Welcome back to the channel. My name is Patrick and I've got another trade for you. It's another trade example. I wasn't able to record it because it came quite early and I've only just been able to get some time to myself now. So I'm going to show you the trade setup and show you how I play that, and it's still actually active right now. But before I get into all of that, I wanted to talk to you about something else. Okay, so the thing is, now I am very happy where I am in my trading cycle, in my trading journey. Okay, so I found my center. Okay, I have a winning strategy. I've started managing my risk, and there's one aspect I've started addressing, and this is what I wanted to talk to you guys about. Okay, so for all you newcomers, new traders, that you need to know this from the beginning. Okay, it's not really discussed openly. Everyone's usually just focused on one thing, which is the strategy. But this is something that you need to know from the beginning. Okay, so I'll show you this trade in the end. If you stick around, you'll see how this trade played out and where I think price is going. But before I touch it, I want to talk about this subject. Okay, so to become a profitable trader is easy, but to become a consistently profitable trader, it requires three steps. Okay, so one, strategy, a winning strategy. So whatever it could be, I have my own setup. I'll show you that. But whatever it is, whether you trade supply and demand, whether you trade SMC, whether you do support and resistance, whatever it may be, if it is giving you if it's making you profitable and you are happy with the returns, that's fine. You just need to make sure you're consistent with that behavior and you're good. So whether you got a high win rate or a low win rate, you can have a win rate of 30% and still be profitable because you have a strategy that when you do win, your wins perform better than your losses. Okay, so and if you are like me and you like to have a higher win rate and be in and out of the market as quickly as possible, maybe you're scalping and you need a higher win rate. You need something like 70% or higher. Okay, it all depends on your personality. So that's step one. Have a strategy that works. Okay, step two, risk management. Risk management is quite easy, to be honest, right? But because trading is new to us and we are trading from home, or yeah, mainly from home, and there's no rules to it really. We control our time, we control our risk management, how much money we allocate to trades. We could get a bit reckless, we could let our emotions get to us, and we could get a bit greedy, overconfident, and we could really mess up when it comes to risk management. But risk management is very important. Having a stop loss, having a clear defined take profit, having a allocating the lot amount, knowing all of this in advance before you enter a trade. You need to be able to do this before you get into any trade. Okay, so it's something that needs to be addressed. Some people like to risk a certain percentage, some people like to risk a certain amount of pips. Me personally, I look at a quantity of pips based on statistics. Okay, look at all my trades, all these back testing I've been doing, all these trades I've taken. I've accumulated a lot of trades, and I've seen statistically I rarely lose more than 15 pips. And if I do lose more than 15 pips, that's it. I need to stop. Okay, so I base my risk on that. So I rarely trade a zone that's larger than 15 pips. Okay, so I can't have a stop loss that's larger than 15 pips, typically speaking. Okay, and depending on the pair, depending on the instrument, that may vary, but that's why I'm focusing now on only one instrument, which usually gives me a maximum range of 15 pips. Okay, so that's step two, risk management. What I'd like to do is also on the step two, what I like to do with risk management is once I've known my range, I try to get a one-to-one, but sometimes I do less than one-to-one. But therefore, I need to consider how much money I'm going to lose. So, for instance, one-to-one may be 15 pips, but I don't want to stay in the market waiting long enough for it to do 15 pips. So maybe I use a little bit more leverage and therefore aim for 6 pips. Okay, and if I do that, increasing my leverage, it means my stop loss, the risk has increased as well. Even the stop loss is the same, it could be 15 pips, but if I use more leverage, I've increased my risk. So for me, what I like to do is look at the dollar amount, also how much I'm willing to lose. So that's the key. Step two is the key is how much money are you willing to lose? Before you enter any trade, just ask yourself that whether it's a percentage, you're happy to risk a certain amount, percentage amount, or you're happy to risk a certain dollar figure. Okay, so it depends on what your preference is. Right now, I always look at how much, based on the account size, how much money am I willing to risk? Is it $500? Is it $600? And I calculate the risk based on that. Okay, so that's step two. Step three, this is the big one. Okay, I've been neglecting this for a long time, and it's only now I've started addressing it, and it's made a difference in my trading. If you've been following the channel, you saw last week I made, I can't remember, was it took 12 trades or so, and I won 11 of them, 91% win rate. I made in excess of 9% last week. Okay, following a strict setup, managing my risk, but also addressing step three. Step three is the big one, okay? And it's the most difficult to address, to be honest. I've been trying to address it. I've been conscious of it for about a year, but I've only started now addressing it because I've got to a point in my trading where I thought, well, this is the last thing to do, and it's really affecting me, so I need to start addressing it. So step three is the psychological aspects of trading. Okay, so you've got step one, becoming profitable, step two, managing risk, and step three, why do you keep messing up? Why do you keep on getting into situations that's outside your step one or step two? Why do you keep on doing things that you know doesn't work? Okay, and there's a lot of reasons it could be, but basically it comes down to the individual, who you are, and aspects that you may not even be aware of that may have influenced you from your childhood, maybe childhood traumas, maybe relationships you are currently in, whatever it could be. Something triggers you and keeps on, it keeps you in the same pattern where you keep on repeating mistakes. Okay, so until you've addressed step three, or find a way to address step three, you won't become profitable consistently. You become profitable, but you will not be consistently profitable. There are a lot of traders who've been trading for many years who have still not addressed step three, and they are yet to be consistently profitable. Okay, so step three is the most important aspect you need to address. So step three for me, I'm going to tell you how I addressed it. Okay, so a lot of people try different things, whether it's meditating, whether it's using music therapy and stuff like that. For me, the way I addressed it was to look at myself. Okay, look at my behavior, look at when I'm trading, why I am reacting certain ways, why do I overtrade, why do I over leverage, all these things. And then I looked at my lifestyle and saw how it was affecting me, how I would react around the people I care about, right? It made me very irritable, made me very emotional when when I've had a winning day and I've turned it into a losing day. Obviously that's going to affect you mentally, and it's going to affect the people around you, right? So I've looked at step three, and now I looked at an aspect in my life that I wanted to start addressing, and because I've started to address that, it's actually now visible in my trade. It's improved my trading, believe it or not. Okay, so the way I addressed that was through discipline. Okay, step three, the best way, or at least the way I'm addressing it, is through discipline. Okay, so to be disciplined is, for me, is to have one setup, have one pair, and have a fixed stop loss and a flexible TP. Okay, and then once I get that one trade in that day, I'm good. Okay, so I've already taken that trade today. I'm going to show you that, and that's what's been working so far for me. There is another aspect of this. There's a lot more to this, to be honest, but I'm not going to unravel it all in this video because it will make this video way too long. So let's get down to this trade today. Okay, I just wanted to touch on that. Hopefully it helps you with your trading. I believe it should, and that's why I wanted to touch on that and not just giving you these simple, straight up, simple trades I've been taking. Okay, so here's the trade setup on the trade I took this morning and the last trade I'm going to take today, hopefully. Okay, so we are trending right on Euro USD. Clearly we've got a low, we've got a high, a lower high, a higher high, a higher, did I get that right? So we've got low, that's a high, a higher low, sorry, a higher high, a higher low, a higher high, a higher low, a higher high, higher low, and it just been pushing up. We are trending clearly, right? I expected a pullback to this zone, but it's not interested in doing what I want. Price is pushing further up, okay? On Friday, it stalled around this zone here. If you look on D1, you can see why it has entered a major supply zone. This is the zone, okay? Yeah, it's a massive zone. So this is why it's possibly taking long to see any kind of significant pullback. So from here to this top here is the zone, okay? Or you could refine it actually to this low to that top is the zone, okay? So as you can see, if you refine it, it hasn't got there. So it could still remain bullish, yeah? It hasn't really reacted to this zone. It doesn't need to. This is the real zone where price hasn't been since. So if I'm a seller, I want to get a really nice price. Price is coming back to an area that it was sent down initially from. This is the zone where I'm going to try and get back in, okay? So that's the zone. And as you can see, price on the H1 has not quite yet reached that zone. Let's zoom out. No, can't see it there. It hasn't yet reached it. So there's every reason to remain bullish, okay? Yeah, there's every reason to remain bullish here. It's not there yet, okay? But at the same time, it is at highs. So there's a reason to be bearish, okay? To expect a pullback or a sell, maybe taking it back down to this area here and using this as a support, using that as a support before it goes back up, okay? So either scenario could work. So what do you do? M5, go to a lower time frame and see what's happening. Now remember, this is Monday, okay? So Monday is meant to be choppy, okay? So don't expect price to move fast, don't expect price to go far, okay? But on a lower time frame, I saw a clearer option, okay? Because every trade is 50-50. Every trade is 50-50. You're either buying or selling, okay? And here in the Asian session, price didn't really move much, okay, especially from the previous day. So we've got highs here, we've got lows here, and price just stuck around this. So this is really all a bit consolidating, okay? But I was able to see the price action for what it was, and I was able to catch a trade, okay? So what I've seen is we've got equal highs here, and from this high here, it trended down, okay? It's trending down. Look, it's respecting that low here, respected that last high. That last high respected that last high. So high, high, lower highs, lower highs, lower highs, lower highs. Okay, so that's what I saw it from. At this point here, it's meant to push down again to do another lower high. Okay, so that's what you would expect from the trend. So at this point here, it's meant to continue its downtrend. Okay, so Asian session here pushes it down. It pulls up here. From this point here, it should continue down. It didn't. What it did is hold here and push up and beat in this last high, okay? So this is my range. This top here to this bottom, that's my range, okay? So if I'm trading this, my stop loss is going to be underneath this low, okay? Potentially, right? Cool. Before I jump into a trade, let me just check that range. So that's 12 pips. So like I said, 12 pips is good enough for me. 15 pips is what I look at. If it's more than 15 pips, I don't think I'm going to take that trade, okay? So that's 12 pip range. That's good enough for me. So before this here went pushed up and broke this structure, did it give me a flag? So from here, it went up, it pulled back and went off. So this is what I call a flag. That little pullback to go up again, okay? So it broke structure with a pullback. The way I see this is, someone was trying to push price down here, and at this point, someone said, nah, we're going up. It pushed it up. These guys here tried to push it down again. These guys said, no, we're still interested, and it pushed it up and broke. So right now, buyers, because it's going up, buyers are in control of the market. At this point here, where it broke structure, buyers are in control of the market, okay? So then if you zoom out, you can see we have a trend, uptrend here. That was a high. So that was a low. There's a high, there's a higher low, equal high, and this low here respected that last low, so it's still trending up. Okay, so remember, on the higher time frame we have a reason to sell, we had a reason to buy. On the lower time frame we could see here it makes more sense now to buy because we are still respecting lows and we are on an uptrend. It makes more sense to buy, especially with this slow movement down and all these equal lows, equal highs here. Now, why is this significant? Well, we're on an uptrend. We've got tons of equal highs from Friday. So anyone who got in here trying to push price down may still be in this trade here. Price is reversing now. It's broken structure. If it's reversing, it's broken structure, where could it be going? Clear, right? It's clear. It's going back up here to potentially get all the stop losses that are sitting above these triple, quadruple highs up here, right? So I expect price to keep on driving to beat those highs and maybe then put a reversal and come down if it's going to come down today. Okay, so that was a clear read for me. I was able to see it for what it was, and what I did was take the trade. So at this point where it came here, it pushed up, it flagged, and it pulled up. I was looking at price from around here. Okay, so when it pushed up again and pulled down around here, I thought, oh, this is quite decent price. I didn't see it going down there. It could have, but I didn't believe it was going down there. I thought here is not a bad price because normally I'd be entering up here. So here gave me a decent risk to reward. I think it was only 10 pips. And if I wanted 10 pips, it was very possible from that point. So let me just get my trade history up. Yeah, so it was down there. So from this point here to get 10 pips, it's just there, right? So that's a straightforward trade. There's nothing up here scaring me. There's no supply zone here I'm worried about because this supply zone is already being used here. This supply zone is already being used here. So there's no imbalance or anything. There's an imbalance there. There's no imbalance to worry me. As you can see, price got to this imbalance here and it gave that pullback. So I had no reason not to take this trade. Okay, so I took the trade. So I took it for 7 pips, quite simple, and my risk here was 9 pips. So risk here 9 pips, 7 pips, 1-to-1 was easy, and obviously you could get, not obviously, but you could have held it to TP. My realistic TP would have been here, 21 pips. So 9 pips, about 2-to-1 easily, right? So that's the trade I took. Very straightforward trade, nothing exciting about it. I was disciplined. I only took it for 7 pips, and as you can see, I made $700 this morning. Why do I need to complicate things? I don't even need to see it run these highs because I expected these highs to be run on Friday, and look what it did. It just kept it in there by 1 pip and came all the way back there. So if you had your stop loss there, try to run these highs from here or even here, and you had your stop loss there, you just got stopped out. They did just enough to stop you out. Now they're going to do the move that you knew was going to happen. Okay, so why do I need to complicate things here, right? I got my TP here, 7 pips. This is 1% on my account, right? Why do I need to wait to see if it's going to try to do that? I don't need to do that. I don't need to wait and get taken out, then it goes there. Remember, the markets here is designed to manipulate and make money by us losing trades. So I don't need to do that. If I can make 1% on this 7 pip move, I'm gonna go for 1%. Okay, so that's the trade set up today. That's the trade I took, and I kept it that simple this morning, and I don't see no reason to make it any more difficult. I could have left the runner, but what I'm focusing on is my discipline, as I've mentioned a few times, and my discipline is just to take my fixed TP, whatever TP I set out in mind when I got into a trade, and get out. Okay, that's one trade today. I don't really see me taking another trade today. And I may not trade tomorrow. Apparently I'm going away tomorrow, so I'm going to the Weekends concert, so I'll be away for maybe a day or two. Probably trade, but that I'll be able to post anything. Okay, so hopefully this has been enough info for you. Hopefully this is quite useful. All this information I've unloaded on this video, and when I get back, I'll try to post up something once I got a trade example. I've got something I want to talk to you about. Okay, hopefully guys you find this useful. If you do, you know what to do. Hit that like button, support the channel. I keep on getting these videos out to you. Okay, hit the subscribe button to stay tuned and see my progress, and I keep getting these videos out to you. All right, this is Patrick signing out, and until next time, peace.